All right, so you want to talk Bitcoin and real estate, huh? Well, buckle up, because today we are diving headfirst into this question everyone's asking. Is Bitcoin the new real estate?
It's a big one for sure.
It really is, and we've gotten a ton of questions about it from all of you. So to help unpack all of this, we're taking a deep dive into some insights from Leon Wankum, a Bitcoin and real estate expert.
Yeah, he had some really interesting points in that talk he gave at BTC Prague 2024.
Didn't he? He didn't hold back at all. I mean, he just comes right out and says it. Real estate, that thing we all think of as the safe haven, well, Bitcoin might be coming for its crown.
Yeah, and what I found really interesting was how he kind of flipped the script on how we view real estate in the first place. He starts by saying, look, for centuries, real estate's value was all about utility. Right? It was about you can live in it, you can farm it, rent it out, whatever it's worth was tangible, tied to what you could actually do with it.
Which makes sense. That's how most of us think about real estate, right? It has use to us, so it has value.
Right, exactly. But Wankum, he argues that this whole idea of real estate as like the ultimate safe haven, it's actually a bit of a modern invention. He links it to the rise of what we call fiat currency, which is basically money that isn't backed by anything tangible.
Like gold, you mean?
Exactly. Think gold. Before, the dollar was tied to the gold standard, but these days it's not like that. Now we're talking about dollars, euros, yen. These are all fiat currencies, not tied to anything real.
Okay, so I'm following so far, but how does this tie back into real estate?
So think about it. When the dollar was tied to gold, like back in the day, there was a limit to how much money the government could print.
Right, because you'd need to have the gold to back it up.
Exactly. Yeah. But once that link to gold was broken, central banks, they could suddenly print money much more freely. And what happens when you print more money?
Inflation. Everything costs more because the money itself is worth less.
Bingo.
Huh.
And Wankum argues that's exactly when real estate took on this new role as like a hedge against inflation.
So instead of gold being the safe haven, it became real estate because people needed somewhere to put their money to protect it from inflation.
You got it. It became this go-to thing for people who wanted to shield their wealth from like the decreasing purchasing power of their money thanks to all this new fiat currency floating around.
So real estate sort of became a safe haven by accident, like it was just in the right place at the right time as central banks were printing more and more money.
That's essentially Wankum's argument. And this is where things get really interesting because he goes on to say he thinks we're on the edge of another huge shift. But this time, it's not about gold or fiat currency, it's about Bitcoin.
Okay, so real estate's dominance as a safe haven maybe isn't all it's cracked up to be. And Wankum seems to be saying Bitcoin is poised to take over. But I have to ask, why Bitcoin specifically? I mean, there are a lot of cryptocurrencies out there.
Right, and that's where Wankum gets really into the weeds about what makes Bitcoin unique. It's not just, that it's digital or easily transferable, although he talks about that too. He's laser focused on this idea of Bitcoin as a store of value. And for him, it all comes down to the fixed supply.
You mean the fact that there will only ever be 21 million Bitcoins?
Exactly. See, with regular currencies, governments can just print more whenever they feel like it, which of course devalues the currency overall. It's like we were saying earlier about inflation.
Right. More dollars in circulation means each dollar is worth less.
Exactly. But Bitcoin, it's different. The supply is literally hard-coded into the system. No one can just decide to create more. And in a world where governments and central banks kind of have unlimited power to print money, well, Wankum sees this fixed supply of Bitcoin as incredibly valuable.
It's like digital scarcity. Instead of a limited edition baseball card, it's a limited edition digital coin.
I like that. Limited digital coin. And this scarcity thing ties into another point Wankum makes about what he calls intrinsic value. We touched on this a bit earlier. Basically, he's saying a lot of what we consider valuable isn't necessarily because the thing itself is inherently valuable. It's all about perception and what the market decides.
So like a beachfront property might seem inherently valuable, but if no one wants to buy it...
Then is it really that valuable?
Yeah.
That's what Wankum's getting at. He even brings up Carl Menger to make this point.
And who's Carl Menger again?
Only. Like one of the most important economists in history. But anyway, Menger said that value is subjective. Right. Something is worth what people are willing to pay for it. And that goes for everything. A house, a loaf of bread, even a Bitcoin.
So if suddenly everyone decides they only want to buy virtual real estate in the metaverse using Bitcoin...
You're getting it. Wankum would say that that's a perfect example of how value can shift. What we find desirable changes over time. And right now, he seems to think Bitcoin is in a good position to capitalize on those shifting values.
Okay, so let's say I'm a real estate investor, and I'm starting to see where Wankum's coming from. What's his advice? Should I sell all my properties and go all in on Bitcoin? That's the million-dollar question for sure. Sell everything and go all in. What does Wankum say?
Well, he's not saying everyone should, panic and dump all their real estate. It's not quite that simple. He's talking more about diversification.
So not putting all your eggs in one basket.
Right. Don't get me wrong. He's definitely bullish on Bitcoin. But he suggests that real estate investors, they should start thinking about, strategically moving some of their holdings into Bitcoin.
Okay, so if I've got a few properties, maybe I sell off one and use those gains to test the Bitcoin waters.
Exactly. Especially, he says, if you've got properties with low debt, those are prime candidates.
Interesting. So you're using gains from the supposedly safer asset, real estate, to get involved in Bitcoin, the potentially riskier but higher upside one.
Exactly. He even brings up Michael Saylor, the MicroStrategy guy. Remember, they use their real estate as collateral to buy Bitcoin, a whole bunch of it.
Didn't they get in some hot water when Bitcoin's price dipped?
Yeah, but that's part of his point, right? It's a bold move.
Yeah.
And Wankum's not saying it's for everyone, but he uses it as an example of how, savvy investors can leverage real estate, even in a world that's becoming more and more Bitcoin-centric.
Okay, I'm picking up what he's putting down, but let's talk about the flip side for a second. What about people who don't own real estate? If Bitcoin takes off like Wankum thinks it will, does that mean housing becomes even more unaffordable?
That's a great question. And it's something Wankum addresses head on. He actually sees it as a potential positive.
Wait, really? How so?
He argues that if Bitcoin does become this dominant store of value, it could actually take some of the speculative heat out of the real estate market.
So you're saying prices could actually go down?
Well, maybe not down, but at least they might start to stabilize, reflect more of their actual utility value instead of being driven up by, speculation and people treating houses like ATM machines.
Okay, so more in line with what a house is actually worth as a place to live, not just an investment.
Exactly. And that could potentially make housing more affordable for, everyone.
I see what you mean, but that's a big if, right? I mean, Bitcoin becoming this dominant force, that's a huge prediction.
For sure. And Wankum doesn't shy away from that. He's just laying out one possible future. But it's an interesting one, isn't it, where Bitcoin isn't this threat to real estate, but maybe a catalyst for a healthier, more sustainable market.
It is a really fascinating idea, a lot to think about. So if our listeners take away one thing from today's deep dive, what should it be?
I think it's this. The relationship between Bitcoin and real estate is complex, and it's still unfolding. No one has a crystal ball. But by understanding the forces at play, like fiat currency, inflation, the nature of value, we can make more informed decisions about how we navigate this changing landscape.
Done said it better myself. Well, folks, there you have it. Another deep dive in the books. A huge thank you to you, our listeners, for joining us on this journey into the future of finance and, where we might be living in it. Keep those questions coming, and we'll be back soon with another deep dive.